Right now, we're looking at all these markets because some of them are really down substantially. So we're seeing incredible opportunities and bargains. Our focus, of course, is on India to begin with because there are lots of things happening there. And, of course, you must remember this oil price decline is very, very good for India. It's good for China. It's good for all these oil importing countries. So things are looking good in some of those areas. But, of course, you know, now's the time to be buying like porcupines make love.
Carefully. I think
that's a good way to put it. Timing is the real question. We just heard Jim O'Neill talking about the fact that it appears that Asian countries may be getting more ahead of this than Western countries. Obviously, you spend a lot of time in Asia. Do you get that feeling? Is it time to start buying? There may be bargains, but there's still risk.
No, I think it's true that Asians tend to be much more cautious. When something hits like this, they move very quickly to try to prevent infection, et cetera, et cetera. They're really on top of it. And you must remember, these are richer countries compared to, let's say, some countries here in Africa and some countries in Latin America. So they have the resources to go after it. But I think we have to be very careful with the numbers because it all depends on how many kits are available, how many tests have been taken. I think the reason why you have high numbers in Korea is because the Koreans are very good in testing people and having the kits available and doing the job to detect the coronavirus. So I think, yes, Asia is in pretty good shape.
Yeah, but is it time to start putting money to work? Obviously, you're identifying things you want to buy, but are you buying, or is the risk still out there and you want to hold off a little bit?
What we're doing is switching. In other words, those stocks that we have not been too excited about for one reason or another, we're cutting, and then adding to those stocks that, you know, we're fundamentally much more confident about. So it's really a question of buying and selling, but actually more buying than rather than selling.
So, Mark, does that mean that you're taking on more risk or just maybe shifting where the risk actually is?
Shifting away from risk, actually. In other words, looking at the whole portfolio and saying, look, these companies sort of so-so, we're not that excited about them. Let's get rid of them now. We were thinking of getting rid of them earlier, but now we'll quicken the pace and use that money to buy the things that we really like. So it's a good opportunity to make those switches.
How are you finding market structure and liquidity these days, particularly overseas? A lot of people wondering if we're going to see a 2008-like scenario.
Well, you know, liquidity in some of these markets is poor in any case. I mean, you go in and you be lucky to find a stock that you like that is doing a turnover of $2 or $3 million a day. So liquidity is an issue that you have in emerging markets, particularly in frontier markets. So you've got to live with it and go in slowly. And of course, when you want to get out, you've got to do it slowly as well.